Hey Puppy Trades, wanted to do a technical analysis video update on three stocks in the online consumer and e-commerce sector: Alibaba, JD, and Amazon. Okay, so the reason we're doing these three stocks together is because JD, Alibaba, and Amazon, they're all part of that e-commerce, online retail sector that moves together. Okay, so the consumer sector, Target, Nike, Alibaba, all these stocks move together. Why do they move together? Because they're in the same ETFs. Okay, an ETF is short for an exchange traded fund. Okay, so when we do this analysis of Apple and Tesla, the reason that we're pairing Apple and Tesla together and saying, hey, if Tesla does one thing, Apple's going to do the other, right? So if Tesla takes off like it did, then Apple's about to take off like it will. The reason that we're doing that analysis is because these two stocks are in the same ETFs, right? Apple and Tesla are the largest holdings of QQQ, right? Apple and Tesla are soon to be the largest holdings of SPY, right? So if SPY has already broken to, above the September high, we're not looking at Apple and Tesla and thinking, oh, okay, so SPY is going to go to the all-time high, but, Apple's going to crash. That doesn't make any sense because Apple is a 5 or 6% holding of SPY. So the reason that we're doing these stocks together is because JD, Amazon, and Alibaba all move together because they're all part of the same sector, okay? JD especially moves very close with Alibaba, and Alibaba is even called the Chinese Amazon. Okay, so if we're looking at the Alibaba chart and the Amazon chart and the JD chart, and the JD and Amazon chart say it's very bullish, then when we see a very oversold selling climax that is also an ABC correction that is outside the second standard deviation of our linear regression channel, we'll get more on the linear regression channel in a second, we're looking at this as an opportunity, okay? This is a stock, this is a blue chip, right? This is one of the first stocks that closed above the September high, right? This is a blue chip. They call this the Amazon of China, okay? That sounds, pretty impressive to me, and this stock is very impressive, okay? So when a stock like this has an ABC correction, and it goes beyond the second standard deviation of our linear regression channel, and it has a massive selling climax with these large volume bars, one thing we want to do is we want to look at neighboring stocks and say, what are the rest of this stock's companions doing? And that's going to help us in our analysis of what this stock is about to do. Okay, so Alibaba, let's get into it. Okay, this linear regression channel is new to my videos, but all it is the statistical bell curve. Okay, so if you remember a statistical bell curve, you have your mean score, one standard deviation to the right, one standard deviation to the left, will give you about 68% of all your price points for the mean score. Okay, two standard deviations to the left and two standard deviations to the right will contain 95% of all price points. Okay, so two standard deviations from the right and two standard deviations from the left of the mean score will contain 95% of all the price points, okay? So if we look at this chart, this is the linear regression channel. This is the mean score. This is two standard deviations up. This is two standard deviations down, okay? So the way this channel works, you want to buy on the bottom, extremes, and you want to sell at the upper extremes. And the idea is that this linear regression mean line will act as a magnet, okay? So this is just a statistical bell curve. The idea is this channel will contain 95% of all price points. So anytime price moves, above this channel on the 6 to 9 month time frame, you don't want to be long. Anytime this price moves below this channel on the 6 to 9 month time frame, you don't want to be short. Okay, if you don't want to be short, that's a buying opportunity. Okay, so that's just the linear regression channel in the basis. We are right now further than two standard deviations away from our mean score, right? Just a basic linear regression trade right now would take Alibaba to 301. So statistically, I'm looking at this as a very good opportunity. As an options trader, I'm also looking at this as a very good opportunity because this is an 18% decline in less than a month, right? This is the absolute obliteration of premiums, right? And how do we know that? Look down here. Look at these massive selling bars, okay? Let's just say price is below this line, declining smoothly for 5 or 6 months, right? And then in a couple of days, we have these massive, bigger than the rest of it was all year, volume bars, right? And they're selling volume bars. So what's happening? Okay, what's happening right here is that all of these people who were trading margin, who were long Alibaba, who didn't want to, they bought Alibaba maybe up here, right here. They're, oh, this is a base breakout. We're going to new highs, They buy Alibaba. It's a great idea, but they're on margin, right? So when you're on margin, it doesn't really matter if you think it's a great idea. Your broker has to agree with you. Okay, so when Alibaba starts falling 18% in a couple of days, all these brokers are saying, yeah, I'm liquidating your shares for you. I'm liquidating your shares. I don't care. And then what are the institutions doing? Right? The institutions are absorbing all of these shares because they want to be long Alibaba, okay? Their brokers are not going to max them out, right? Institutions aren't trading on, Robinhood margin accounts, right? If Alibaba goes down 18%, no one's going to force liquidate them, okay? So these are margin investors losing their shares at a rapid rate, and they're being absorbed right now by institutions, okay? So we have this classic declining volume confirming bullish consolidation. We're outside the lower bound of this linear regression channel, okay? So when you're, long a stock, or you want to be long a stock, you want to be buying on dips to this lower line and selling on dips to the top of this line. This is just an objective way to say, hey, we are further than 2 standard deviations away from where price is currently. If you believe that Alibaba is in an overall long-term bullish uptrend, which we'll get to the wave theory in a second, this is an objective place to buy, and that's based on statistics, okay? Another thing that we're going to do is we're going to zoom in on this daily candle, and look at this. This is the very, not only do we have these massive declining, selling climax volume bars, we have a beautiful hammer candle right here, right? So how do we know that this correction is damn near complete? Okay, well, we have this high, okay, and then from this high, we have an A, B, C correction. So if you want to get in a stock, you want to see a wave A, a wave B, and then once wave C has reached the length of wave A, that's when you're really looking for clues, okay? We've got a huge selling climax. That's a big clue, but we've also got a very beautiful hammer candle, which is pretty reliable. And what it basically says, especially after all these down days, is, hey, sellers are exhausted, okay? The volume bars were already telling us that sellers were exhausted, but this hammer candle is kind of the cherry on the cake, okay? Because this is saying, price starts at the open, it goes down, and sellers can't close, right? So sellers push the candle down intraday, but they can't close, right? Buyers push it back up. This is the classic definition of a hammer candle. We're seeing these hammer candles. We're seeing these large selling climax bars, and wave A has reached the length of wave C, and we're outside the 2nd standard deviation of this linear regression channel, okay? So we're going to turn that off. We're going to start talking about the wave theory voodoo, okay? So if you're an Elliott wave theorist, once you break above this high right here from January, you're in a bullish sequence, okay? We are clearly in a bullish sequence. No one could call this an expanded flat, because an expanded flat would stop, right here, right? If you, go up 120% from the low, that's not an expanded flat, okay? That's a massive impulse run, all right? This is a huge impulse run from the March low to the October high, right? So this is a 6-7 month run. We're going to say, conservatively, that this is a 6 to 7 month run. So if you're an Elliott wave theorist, you take the length of this move and you place it at this low. That's going to give you your future time and price target, okay? So long term, the time and price target for Alibaba is that it will reach 400 in the next 6 to 7 months. Okay, I believe Alibaba will reach 400 in the next 6 to 7 months, and I actually believe it's going to go further, because this is just the equal legs target, right? Remember, in Elliott wave theory, wave 1 is a certain length, and then wave 3 is 1.618% the length of wave 1, okay? So we have wave 1, we place it at the wave 2 low, and that gives us a very conservative target. Okay, so the conservative target is 400. Okay, now the only downside to this trade is that this isn't a set it and forget it, in my opinion. you have to make sure that we don't close, or that you don't let your position, or this is for me, I'm going to make sure I don't let my position close below 252. Okay, if we close below 252, that invalidates this hammer candle, and I don't want to be picking bottoms, below here. All right, I got in a pretty good entry around 254, and just on $1.50, $2 recovery to end the day, I'm almost up 100% on my options position. So once I get to 100% on an options position, what I will then do is I will sell half immediately and consider the rest of the position risk-free, then use that capital to enter new positions. That's when I have the set and forget it mentality. So what I'm doing right now is in the next 2 months, all right, and we get 2 months from here, right? Because this is a 2-month move. I am, projecting conservatively in the next 2 months, Alibaba is at the very least going to reach a new all-time high. Okay, so what I'm projecting is that, yes, Alibaba will reach 400 in the next 6 to 7 months, but it will also reach a new all-time high in the next 2 months, so long as price has a daily, does not ever close below this low candle wick of 252. Okay, so now we're going to get into JD real quick. Remember, we're looking at JD as, more technical evidence that Alibaba is a good dip to buy right here. But we're also looking at it as a setup, okay? So JD goes on a 5-week run, forms this cup and handle pattern with declining volume confirming bullish consolidation, large volume breakout, a couple ways you can get the price targets. Take this move, take the length of this move, place it here. That gets you to 99. You can take the negative 78.1% retracement of the correction, and now that we've closed above, this is confirmed that, we're at the very minimum going to 99. So my price target for JD is 99. This should definitely be hit in the next month. In my opinion, the next 4 to 5 weeks, JD will hit 99. JD is going to go to the median of this pitchfork. I've been saying get long JD from here, right? So this isn't exactly like a new setup, but, I do expect next 4 to 5 weeks, JD is going to reach 99 right here. Declining volume confirms bullish consolidation. Extremely beautiful pitchfork, beautiful reactions on the median. So more importantly than 99, I would almost be more interested in just swinging for the median of this pitchfork. And then we also have our cup and handle target, which is where you take the length of the cup, place it at the top of the handle. That's another classical TA way that JD is going to 100, right? So what I'm saying with JD is that we have so much evidence JD is going to 100. It makes me especially interested in Alibaba because JD and Alibaba are both online Chinese retailers, okay? So another very, similar sister trade with JD. This is a pretty good swing trade setup in my opinion. But remember, I'm more focused on Alibaba right now. This is the Amazon, right? So they call Alibaba the Chinese Amazon. Amazon has an extremely bullish setup too, right? This is a huge bull flag. This is exactly what I'm saying JD is, right? This is exactly what I'm saying Alibaba is. A wave 1 from the March low, an ABC correction, and now we're about to do wave 3 higher, okay? So wave 1, ABC, you take the length of this move, this 6 to 7 month move, and that takes Amazon to 4,777 in the next 6 to 7 months, okay? So 6 to 7 months from now, I'm expecting Alibaba to reach 400. I'm expecting Amazon to reach 4,777. So that means, around by April or May, I'm expecting 4,700 for Amazon, and I'm expecting 400 for Alibaba, okay? Amazon, very, easy technical analysis here. Declining volume confirms bullish consolidation. Large selling climax gives us a timing signal. You can still see these volume bars are declining. Still a little more consolidation, but, very cut and dry. Wave 1, ABC. Wave 2, we're going to, at the very minimum, 4,777, so long as this low of 3,019 holds, okay? Remember, I think Baba is the best setup right now. Baba to 400. In the next 6 months, Baba to a new all-time high in the next 2 months. But I'm also very interested in how Alibaba and Amazon and JD move together. Okay, so Amazon, we're expecting 4,777. So long as 3,000 holds as the low, 3,019. JD, we're expecting 99 in the next 4 to 5 weeks. We're expecting Alibaba to make a new all-time high in the next 2 months.